Welcome back to our series on interpretation and explanation of the Company Income Tax Act. So far, we have covered the section 9, 10, and 11 of the Act, breaking it down by giving literal interpretations, thorough analysis, and practical case studies to simplify the concept. In today's video, we will delve into sections 12 and 13. These sections hold the keys to understanding full disclosure requirements and the taxation principles governing Nigerian and non-Nigerian companies alike. Join us as we dissect the intricacies of these provisions and as we explore the mandate for transparency, the definition of economic presence, and the implication for businesses operating within Nigeria. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. Section 12. Full disclosure or agreement to be made. Any company entering into any agreement, whether oral or written, in respect of any service under Section 9 of this Act shall forthwith make a full disclosure to the service in writing of the terms of such agreements. Section 13. Nigerian companies. The profits of a Nigerian company shall be deemed to accrue in Nigeria wherever they have arisen and whether or not they have been brought into or received in Nigeria. The profits of a company other than a Nigerian company from any trade or business shall be deemed to be derived from or taxable in Nigeria where A. That company has a fixed base of business in Nigeria to the extent that the profit is attributable to the fixed base. B. It does not have such a fixed base in Nigeria but habitually operates a trade or business through a person in Nigeria authorized to conduct on its behalf or on behalf of some other companies controlled by it or which have a controlling interest in it, or habitually maintains a stock of goods or merchandise in Nigeria from which deliveries are regularly made by a person on behalf of the company to the extent that the profit is attributable to the business or trade or activities carried on through that person. C. It transmits, emits, or receives signal, sounds, messages, images, or data of any kind by cable, radio, electromagnetic systems, or any other electronic or wireless apparatus to Nigeria in respect of any activity, including electronic commerce, application store, high-frequency trading, electronic data storage, online adverts, participative network platform, online payments, and so on, to the extent that the company has significant economic presence in Nigeria and profit can be attributable to such activity. D. That trade or business or activities involves a single contract for surveys, deliveries, installations, or construction, the profit from that contract. E. The trade or business comprises the furnishing of technical, management, consultancy, or professional services outside of Nigeria to a person resident in Nigeria to the extent that the company has significant economic presence in Nigeria, provided that the withholding tax applicable to the income under this paragraph shall be the final tax on the income of a non-resident recipient who does not otherwise fall within the scope of subsection 2A to D, or F. The trade, business, or activities is between the company and other person controlled by it or which has a controlling interest in it, and conditions are made or imposed between the company and such person in their commercial or financial relations, which, in the opinion of the service, is deemed to be artificial or fictitious. So much of the profit adjusted by the service to reflect arm's length transaction. For the purpose of subsection 2A of this section, a fixed base shall not include facilities used solely for the storage or display of goods or merchandise, collection of information. For the purpose of subsection 2C and E, the minister may by order determine what constitutes the significant economic presence of a company other than a Nigerian company. Interpretation, analysis, and case studies of Section 12. Full disclosure or agreement to be made. Literal interpretation. This section requires any company entering into an agreement for services outlined in Section 9 of the Act to provide a written disclosure of the terms of the agreement to Federal Inland Revenue Service (FIRS). Analysis. This section aims to promote transparency and accountability by mandating companies to disclose the terms of their service agreements. The intention is to ensure that FIRS is aware of the details of the agreement being entered into by companies. Case study. Company A enters into a service agreement with a technology provider for the development of a new software application. In accordance with this section, Company A must provide a written disclosure of the terms of the agreement to FIRS. Interpretation, analysis, and case studies of Section 13. Literal interpretation. Profits of a Nigerian company are considered to have accrued in Nigeria regardless of where they were gained or whether they were brought into the country. Profits of a non-Nigerian company from any trade or business will be deemed to be derived from or taxable in Nigeria under certain conditions, such as having a fixed business base in Nigeria, operating through an authorized person in Nigeria, transmitting signals to Nigeria, conducting specific types of contracts, providing services to Nigerian residents, or engaging in artificial or fictitious arrangements with related companies. Analysis. This section establishes the principles for determining the taxation of profits earned by Nigerian and non-Nigerian companies. It outlines the specific condition under which profits of non-Nigerian companies will be subject to taxation in Nigeria, emphasizing the significance of economic presence and various business activities conducted in the country. Case study. Company B, a multinational corporation, operates an online retail platform with significant economic presence in Nigeria. According to Section 13, the profits generated from its online sales to Nigerian customers are deemed to be derived from or taxable in Nigeria due to its significant economic presence in the country. Interpretation, analysis, and case studies of Section 13, subsection 3 to subsection 4. Literal interpretation. Subsection 3 states that the definition of a fixed base does not include facilities used only for the storage or display of goods or for the collection of information. Subsection 4 empowers the minister to determine what constitutes the significant economic presence of a company that is not a Nigerian company. Analysis. Subsection 3 provides specific exclusions from the definition of a fixed base, clarifying that certain types of facilities, such as those used solely for storage or display of goods and for the collection of information, are not considered as constituting a fixed base for taxation purposes. Subsection 4 grants authority to the minister to establish the criteria for determining the significant economic presence of a non-Nigerian company. This provision allows the minister to set guidelines for assessing when a non-Nigerian company has a substantial economic presence in Nigeria which may subject it to taxation. Case studies. Company X operates a warehouse in Nigeria for storing goods intended for sale in the local market. According to subsection 3 of the law, this warehouse facility used exclusively for storage would not be considered as constituting a fixed base for tax purposes. Company Y, a foreign entity, conducts substantial online sales to Nigerian customers. The minister issues an order specifying the criteria for determining significant economic presence, which includes parameters such as the volume of online transactions and the number of customers. Based on this order, company-wide online business activities in Nigeria may be deemed to have significant economic presence, subjecting it to taxation in Nigeria. And there you have it. Another insightful journey through the intricacies of the Companies Income Tax Act. Join us in our next installment as we continue to decode the complexities of Nigerian tax law, providing clarity and practical insights to aid your understanding. Also, don't forget to check out the previous episodes where we have covered other sections of the Companies Income Tax Act. If you have any question or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.